Today, we're going to get into how family offices allocate their investments and really what their exposure is at the current time to the cryptocurrency markets. Just to give you a little background, if you don't know who I am, my name is Jake Claver. I am the director of Digital Ascension Group. We are a multifamily office that specializes in digital assets. We advise other family offices on digital assets and provide all the professionals that might be proficient with digital assets in each vertical within a family office. So I deal with individuals, high net worth individuals, family offices that have allocations to digital assets, sometimes in a very meaningful way. Sometimes they aggregated their wealth there. Sometimes it's just a family office that has exposure to digital assets. And the professionals that they have within the family office don't really understand them, don't have the competencies to make sure that the accounting, the taxes, and all the other things are done correctly. And so that's where we step in. So with that, I have a exposure to these family offices that are dealing with this or not dealing with digital assets, which we'll see here in a moment. The majority of family offices are still very hesitant to move any assets into cryptocurrency, especially with the last couple of years and what's transpired with FTX and Voyager and Celsius. Until we have real clear regulation around things, the traditional family offices, I think, will continue to either not invest or remain on the fence. There are some people that are progressive and understand that blockchain, smart contracts, Web3 is going to revolutionize financial markets, and they're making bets, either investing in fintech companies or digital assets themselves, but it's still a very small portion of their portfolio. So I put together a presentation today, and we're going to go through, what some of the normal portfolios that somebody that's managing $1 billion looks like, and what portion of that is allocated at the current time to digital assets. So here we have an average portfolio of a family office managing north of 1.2 billion in assets. So we have a lot of different sectors and verticals here, very diversified portfolio, which is what you want. In order to maintain your wealth, you don't want it all in one thing. You want asymmetric bets that are inversely correlated. And this is, pretty normal here. We're going to have a large portion of their portfolio that is fairly liquid, might be in treasury bills or bonds, cash equivalents. We got fixed income annuities, other things that pay fixed income in developing markets, equities, traditional investments. And then we get into the private investments. We've got direct investments in private equity funds, hedge funds, real estate, REITs, land development, commodities, precious metals. And then you don't even see crypto on here. Somebody that has this much under management, the job of the professionals in a family office is to maintain and grow their wealth above the inflation rate, right? And you're normally paying family office professionals somewhere between 1% and 2% of your entire portfolio on an annual basis to manage your assets. So you want to make sure that you're generating a return significantly beyond that, and hedging yourself against loss, making sure that your taxes are filed the right way and your estate's handled. So we'll go ahead and move to the next slide here. So this is another example. This is a little less specific here, but this is the endowments at most universities that are managing beyond $1 billion, the average of what that looks like. And you can see it's very similar here. We've got cash and cash equivalents is a bit less. They stay a little less liquid. The majority of their allocations are going to be in traditional markets, mostly equities, but they are going to have those private investments that I just discussed. They are managing capital on behalf of a foundation, and so therefore have to be a little bit less risky with their portfolio. That's why they tend to have a higher allocation to equities. But again, you don't see any allocation to digital assets, nothing named here for cryptocurrencies. It might be in that little sliver there that says 0.05% to other. So this is the first time that we're going to see cryptocurrencies, even listed somewhere on a graphic, just to explain how nascent this market still is. This is, a breakdown of the private investments that might be within a family office's portfolio. So again, a lot of the time they're going to be direct investing in real estate. There might be some allocation to REITs. I think, maybe it's off a little bit there at at 0%, but it depends on how proficient you are with real estate, what type of professionals work within your family office, how proficient they are with real estate deals. Most often, family offices are going to go direct and actively manage the investments. They'll have a CIO and other people involved. They're handling that. Um, Again, you see the exposure here to private equity. They're going to diversify. So there's going to be certain investments that the family office is proficient with. They have expertise in a certain business sector and probably understand which companies are going to perform well, and they have the ability to do due diligence on those companies and then go direct with them. They're then going to allocate some to other funds that are diversified, and then hedge funds as well. Managers that actively manage those portfolios and have a good track record, generating significant returns. And then we'll get it down to the other percentages here. Yeah, we got 12% other. That could be a variety of things. 1% commodities, and then it says 0% here to cryptocurrency. So again, very nascent. The majority of the family offices that we work with that have an allocation to cryptocurrencies is somewhere between 1% and 3%. Sometimes even less than that. They're looking at this as an asymmetric bet. If it's goes to zero, which a lot of them have, then it's not a huge loss on their portfolio. But if it does have one of those exponential moves where it's 10, 20, 50, 100x, that could have a very good return for their investment, and become a larger portion of their portfolio that they could then reallocate and rebalance to other areas. So, like I talked about, there's only about 25% of family offices even have investments in digital assets at this point. In 2021, a lot of people were on the fence. They didn't know which way they're going to go. At this point, a lot of people have made decisions, right? As you can see by the graphic here. So about half of family offices in 21 were unsure which way they were going to go, whether they were going to make allocations or completely stay away from it. In 2023, and this was run by Goldman, it was a survey that they did. And we've got 12% that are still on the fence, but everybody else is either chosen. We see an increase by 10% in those that have chosen to allocate. So we're right around a quarter of all family offices do have an allocation to digital assets. And then a large majority of those in that 45% decided, it's a little too volatile, unregulated, problematic. We're just going to, stay at the basics and, keep doing what we've been doing that's been generating returns for us. And I'm sure that that'll change as we see regulation come around the space and the space mature. We just had the launch of the ETFs the other day for Bitcoin. So now they are part of traditional markets. Asset managers, wealth managers, financial advisors can get their clients exposure to Bitcoin and cryptocurrencies in a way that they've never been able to before, earn a fee, which is, part of the game. And as that continues to progress, I assume we'll see more and more ETFs launched for cryptocurrencies that are regulated as non-securities here in the US. We've got other financial products like an ETP in Europe for XRP that I'm pretty bullish on. But I think that these numbers will continue to change, especially as this technology is used within the financial sector, and a lot of these other assets become more liquid because they've been tokenized. The last thing I want to touch on here is actually an article that was written by CoinDesk back in 2021, and they talked about potentially having family offices allocate a portion of their liquid portfolio to digital assets instead of cash. And I thought this was a good graphic here. They kind of explained, some of the benefits of holding your liquid capital in digital assets versus, gold or fiat. Gold's really not even liquid. I mean, based on the chart here, you can see that. It's exchangeable. There's fees associated with that. Fiat, you're not going to have to deal with the fees on conversion. So that's the benefit there. If you're going to park some capital somewhere and you want it to be easily accessible, but you also don't want it just sitting there generating $0, I think crypto can be an effective tool for that. All these investments are tools, right? And rebalancing and allocating things correctly in order to hedge yourself to maintain wealth. That's the name of the game once it's been generated. So, like I said, a lot of people that I work with, have made their wealth in digital assets and have a pretty significant portion of their portfolio allocated to digital assets. Um, we work with them to create solutions to be able to help them diversify without losing exposure. So we'll take leverage against the assets at a reasonable interest rate and then redeploy that capital into more traditional investments to be able to hedge against the volatility. And I think that that's, a lot of the things that'll transpire over the next couple of years here. I think we're going to continue to see, millionaires and billionaires made in digital assets, especially in this next bull cycle. And those that take profit or are in things that will become stable later on as the market caps increase. I think that there'll be a lot of opportunity to leverage these assets in ways that don't exist at this time. And again, you know, uh, the allocations that family offices and endowments are making to this asset class will change significantly as the technology progresses and matures. Seeing one, if you haven't made your wealth in digital assets yet, but you hope to, you hope to have a lot of money one day, um, you can kind of see the diversification of a portfolio that somebody that's managing billions of dollars. But with that, even if it's a couple million, $100 million, you're probably not going to want to have all your eggs in one basket unless you really understand that basket. I do see family offices that have, a significant portion of their wealth in real estate because that's where they made it and they understand it. Others in certain equities and, a certain vertical of business where they have high competency and they understand, the market and the way things are moving. And you just want to continue to invest the majority of your wealth where it's going to do well and you have the competency to make sure of that. But it's never wrong to go ahead and diversify across other portions of the investment opportunities and hedge yourself that you may or may not be wrong about your thesis. I thought that it was interesting, to go down what the average is of family offices and what their allocations are to digital assets. It's still very nascent, like you can see from the graphics that I shared. Um, Again, if you are a family office, if you're a high net worth individual, if you do have an allocation to digital assets and you're having a hard time with your traditional advisors, whether that's an estate planner, CPA, accountant, wealth manager, we have all those individuals within Digital Ascension Group. We're happy to provide advisory services for you. Um, and hopefully, this has been of value. Thanks for watching, and we'll see you on the next one.